Hey guys, this is Market Update. This price action right now is proof that we're in a bull market, in my opinion. Now, of course, we can break this, but I want to give some price levels right here because there is a huge amount of selling going on right now from the US government transferring $240 million worth of Bitcoin into Coinbase Prime, German government, and then you've got the Mt. Gox potential, distributions there as well. So a huge amount of selling and FUD. But what happens in a bull market is that you pull back to range lows and bounce. And that's what we're doing right now. In a bear market, selling drives prices through support levels and goes to lower levels. In a bull market, you're in an uptrend, you come to lower levels and bounce. So that's what we're doing right now. Now, I want to give some price levels here because I think this is important. This 60K is holding, so you can see this level, right? We had a wick down on some FUD, but it seems to be holding. Look, if it goes lower, I think we still remain in a bullish uptrend if we hit this midline, which for right now is about 50K. This is a month chart, so let's call it about 50K. That would be a lower support zone if we are to go lower on maybe some bad economic news, or maybe there's just a huge deluge of selling from Mt. Gox. We don't really know, but for right now, it's not driving us below this level here, which is the kind of range low. We could go down to this 50 level and still remain within a bull market for a big bounce there if we come down to that level. So they're the two levels I'm looking at. It's either this one right here that we bounce from and we don't go lower, which is just showing us that, wow, there's a lot of buyers in this market. And when this selling is done, we're going up to range highs and maybe a breakout, maybe in a couple of months after it's all out the way. If we go lower, I still think we are in a bull market, and this is to be bought because I think 50K is a big support level because of the longer term trend. We're in a bull market, and so we buy support levels. That's just how I see it. If you do trade, you haven't got a Bybit account yet, check the link below and get a deposit and trading bonus. If you make a deposit on there up to $30,000, you can check the link for the details in the description. So I think here's the actual dynamic within BTC, right? Bitcoin is money, and so my money should be Bitcoin, all of it. Bitcoin is money, so my money, all of it, should be Bitcoin. And then I can make other investments if I think they will outperform Bitcoin's compound annual growth rate, which is about 40% a year. So the only time to really pay attention from a market's perspective, because we're just dollar cost averaging, putting our earnings into Bitcoin over the long term, making 40% a year. So the only time to look at the market for timing is when it gets to extreme levels. And right now, we're just in a normal growth phase. We're kind of within standard deviations of this natural network growth. Yeah, we're maybe, coming down into this bit, maybe not. Who cares? Who cares? Only pay attention when we're up here, if we get here. That is where, from a market's perspective, from a timing perspective, Bitcoin gets super risky to take short-term long trades, to take leverage trades, to kind of go all in and say, I'm going to make sure all of my stuff is in here and I don't have any fiat currency to pay for liabilities. You need to pay for liabilities. You need to have your portfolio in order and your payments in order. But for right now, we're just in the normal growth phase for BTC. Bitcoin is money. My money should be in Bitcoin. Up here, maybe you want to take a position against the market, and thinking, hey, you guys are just bidding this up too much. You don't see what's coming. But for right now, look, macro doesn't matter. Interest rates, 2%, 5%, doesn't matter. Bitcoin's growing at 40% a year, right? Inflation's at 2.5 or 2.7 instead of 2. It's irrelevant. Doesn't matter. My money is Bitcoin because Bitcoin is money. We're in the normal growth phase here. Accumulate until we get to these very overextended levels. If it happens, then you can make some market timing decisions if you think that the next phase is a drawdown. We're just in mid-phase. It's accumulate money. Bitcoin is money. Bitcoin has the highest potential outsized returns here because it is an equity. So we're looking at store of value. Now, I know there are a lot of other crypto networks which are really going towards more of the medium of exchange angle, faster, cheaper payments. That's actually a really small proportion of value in the world. Like if we come down here, we've got MasterCard at number 26. It's 420 billion. Ethereum is doing pretty well. It's a new network with some store of value properties, maybe other kind of medium exchange properties, some business properties as well. It's kind of a mix of all things, right? But if you're looking at MasterCard there, and you're looking at Visa at number 18 at 500 billion. So you're looking at the two payments networks in the world that are about just under $1 trillion in value, right? And then really the tech firms are way more than that. So they're, annualizing 10, 15, 20% growth a year, and you got 3 trillion market caps. Still, this absolutely defunct thing here, gold, which is completely useless and worthless as a store of value because it has inflation. So you hold it for 50 years, you basically don't have any money left. This is number one, and it's worth more than all of these top 10 tech firms combined. So Bitcoin as a non-sovereign store of wealth is the thing to focus on, in my opinion. 1.2 trillion to overtake gold's market cap is what, a 16, 15, 16, 17x from here in today's dollars. So you've got a potential 15x plus of actual wealth creation outperformance in the pipeline if Bitcoin is to fulfill its destiny of becoming kind of a store of value for a lot of people around the world. So inflation adjusted, because that will be much higher as we get inflation every year. That is the opportunity, and the market size is insane. So in terms of risk adjusted, if you're looking at this, that is the biggest opportunity. Networks that have more of like tech in them, medium of exchange in them, the markets are way smaller and there's more competition. And these guys have high market caps because they are monopolies, not because of the tech. It's because they're monopolies with what they do. They have an option on all of the best talent in the world. So yeah, okay, they have a high market cap, but it's still not store of value type market cap. This opportunity is huge. That's what I'm in here. I think worrying about whether it's 60 or 50, this thing either goes 17x in purchasing power terms, or it becomes pretty worthless. But I think after 15 years, it doesn't seem to be becoming worthless. It seems to be marching on. I just heard the presidential debates, and without getting political, neither side have any desire to cut the deficit spending. They have no plan or desire or anything to actually cut this deficit spending, right? So it's now 7% of GDP. No one's going to change this. It's going to be the same for the next 4 years, 8 years. The only plan that is given to us to potentially cut this is growth. So you may hear we need to grow out of it. Ironically, the more that you pour in to growth, the more disinflation will happen, because private enterprise is here to give us more for less. It's to demonetize and disinflate prices, right? No one would ever pay more for something that gives them less. So the only thing private enterprise does is invent ways where we get more for less. Technology is massively disinflationary. Even crypto. Look what's happening with crypto. You're demonetizing financial services. Everything that they say is cheaper, faster. So you're now basically getting cheaper, faster finance, right? Cheaper finance. Though why would GDP go up if you're reducing the amount of GDP that can be generated from financial transactions, etc.? So it's disinflationary. Bitcoin is actually disinflationary to prices, because even if marginally 1% of money goes into BTC instead of, let's say, investment properties or REITs or something like that, everything's getting demonetized and disinflating. So it's actually a problem if you're in bonds, I think, and in fiat currency derivatives. Ironically, Bitcoin is the thing that can save us from this. This is why I think in this situation we're in, that Bitcoin is very important as an invention, because it actually lets our asset prices, I'm talking about people that have property or whatever, it lets them disinflate, but gives them an option to keep their purchasing power in BTC as that rises as a counterweight. Disinflation is what should happen. That's wealth creation. Having more for less is wealth creation. So this isn't going to stop. Ironically, the growth initiatives actually can accelerate and keep this where it is. So if we look at the amount of debt that has to be created to keep GDP going higher, it's very clear that we require debt for GDP to go higher, right? Of course we do, because what we're doing is measuring a system where the free market disinflates prices and makes things cheaper for us, which is wealth creation. But we're measuring a system where GDP, this kind of measure of economic activity, has to go higher. It shouldn't go higher. We should be getting wealthier by having things disinflate. So the debt is actually required. If GDP goes negative, then you get this, this mentality of we shouldn't invest. And then obviously the economy breaks down. And if GDP goes negative, people then turn around and say, why is my house worth this much? Maybe I should sell. You get that kind of crash, right? So GDP is required to keep debt is required to keep GDP going higher, especially as demographics tail off. So Bitcoin is a really big solution as a store of value and something that can price in the disinflation that has to occur. And if you're in bonds, big trouble, right? So I know that businesses and people require bonds because they are a currency derivative and their liabilities are in currencies, but Bitcoin is that alternative store of value. And you can see some corporations now bringing this on. It's volatile, it's not a bond, and it's not a currency derivative, but it's actually something that can monetize and be a counterweight to a lot of the disinflation that should occur, that can't occur because we have to keep GDP higher in our fiat system, meaning debt is just going to go ever higher to keep GDP up, even though we're inventing ways to actually disinflate prices and create wealth. So the fiat system essentially steals our wealth away from us to keep the system kind of on the road. We can have a counterweight to that with BTC. If you're a crypto course member, I've got 6 or 7 update videos for you guys that will be coming this weekend. Free for existing users. If you don't have the crypto course yet, I'll link it below. Bybit deposit bonus down below as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.